Hey, folks, welcome to Verified Investing here at InTheMoneyStocks.com. My name is Gareth Soloway, Chief Market Strategist. Today's date is Wednesday, December 16th, 2020. So we just got the Fed decision out. Just to dissect it real quick here, folks. Basically, the Fed said they're going to keep rates at zero through 2023. That's no surprise. The small little tidbit of surprises that caught the market slightly off guard, which has caused us to go just negative slightly on the spiders, is that they say they will stop the bond purchases prior. So basically, once things start improving, they'll start tapering the bond purchases. So you're looking at kind of the second half or maybe the fourth quarter of next year. All right, second half of the year, maybe as late as the fourth quarter of next year for bond tapering. Obviously, that's a little bit of a negative for the market. The market likes free money. The market likes unlimited bond purchases. Basically, the market likes its drugs and doesn't want to get off the sauce. So that's where we stand at this point. The markets, again, have downticked ever so slightly on the day. Not much. We were just slightly positive. Now we're slightly negative on the S&P 500. All right, couple things to go over. Number one, you see this trend line before you. This is a trend line I've talked to my members about for a long, long time. Basically, if you take the high pivot from just prior to the December 2018 collapse here, the high pivot just before the COVID collapse, and you extend it out, you get this pivot, and then look at how we're just gyrating around that trend line. That trend line remains, to me, the biggest level to watch. That is a huge, huge trend line here. I'm not convinced that we're going to break substantially higher. I think the light volume recently has enabled it to go slightly above for a day or two. Then we see a comeback to reality type scenario here. But ultimately, watch that trend line. The other thing I wanted to show you is a target. If and when we get a pullback in this market, I use bands to decipher targets sometimes, and I think the band in this case is a very good band to utilize. Basically, take the lows here and extend them out to these lows recently, right over here. And what you see very clearly is these are parallel lines. So what this tells us is that aside from this scenario where it was catastrophic, right? When you get a crazy amount of emotion to kick in, the markets tend to break these bands. But notice how we got back inside of it. We hit the high end, we hit the low end. We came up close, we went back to the low end, we went to the high end. Now we're hovering right along the high end. What this tells us is that whenever we get a sell-off, this is a definitive target that you should look for, which right now, if we were to sell off in the next week or so, it would take us to about 330 on the spiders. But remember, this is an upsloping trend line, so a couple weeks later will be 332, then 334, and so forth, up a little bit. So watch that very, very closely here. All right, the other thing I wanted to point out is the Russell. The IWM has been on a tear, folks. Just from this pivot low, it's up from basically 150 to 195. That does need to come back in a little bit. All right, this is too far, too fast. If you look at the RSI, it's ridiculously overbought for the IWM, especially on the weekly chart. But again, nonetheless, you have an IWM that is above the 70 threshold on the RSI, which again denotes overbought scenario. So look for that to be one of the drivers. I think this could be the biggest pullback across the board percentage-wise in the coming weeks. I still think you have a potential for a pullback into year end. The reason I say that is because you do have investors that are big players out there with billions of dollars invested in the market. They're not going to take the risk of the Senate going to the Democrats in early January, where long-term cap gains for them would be hiked. They likely will take some profits into year-end to offset that chance or that risk. Remember, the more money you have, the more risk-adverse you become. A lot of people have said, oh, well, the market could go up another 10%, or whatever. That to them, that doesn't matter. If when you're talking about a tax hike of additional 15% or doubling the long-term cap gains, they don't think in terms of, well, what if the market goes up? Because the market could go down too. So I do wonder if that's going to create a little sell-side action over the next couple weeks into year-end. The volume's going to be light on the market, but I am watching very, very closely to see how that plays out. Okay? Couple things just to note here real quick before we get into some other stocks. Number one, follow me on Twitter at Gareth Soloway. Easy to follow me. I post up very intriguing trade setups, commentary, you name it. It's the best on Twitter. If you're more interested in getting my exact trade alerts, come to InTheMoneyStocks.com. Look for my name at the top of the website. Underneath my name, there's a drop down. Boom. 2 services I offer. One for swing trading stocks, one for swing trading options. The swing trading stock verified investing alert service is my flagship. That comes with a daily video, a live broadcast where you see my charts, ask me questions live once a week, plus my live swing trades in stocks. So that's the main one. Then if you want to add the options, it's more power to you as we make money in options as well. All right, going back to the charts here, I want to talk a little bit about a couple stocks that I'm watching today. Twitter, Look at this, folks. Topping tail on Twitter. So that has to be recognized as a topping tail. They got upgraded by JP Morgan today. The stock ripped out of the gate and now has come back in. Still up about 3% on the day. But that topping tail is a powerful sign. This is your downside target. So I'm expecting a pullback to around the 45, 46 level, which is about a $8-9 drop from here off of this topping tail. The only way you would exit the trade if you decide to take a short here is if it closes above on a daily chart close above the topping tail high. That denotes a failure of the topping tail. So a very clear, easy way to read that. All right, another stock to keep an eye on here, folks, that I would like you guys to be monitoring. Watch the semiconductors. The semiconductors are weak today, even with the markets around the flat line. In fact, the NASDAQ 100 is still up 45 cents on the QQQ. So the fact that you're seeing weakness here in the semis is worth taking note of. In addition, look at this big wide range bar, and then this is inside bar bearish action. Until you take out this high, this technically is a small inside bar bearish pattern. What you're looking for is in the coming week or two, does it take out these lows? If it does, you have a defined pivot top in the semis. I don't know if it will, right? I have no idea if it will for sure, but it is something on my radar here for the semis. The semis are up precipitously. I mean, just a remarkable move. Look at this move if I zoom out. Really one of the best performing asset groups, or sectors, I should say, inside of the NASDAQ for this year. Lastly, I have to talk about the transports. The transports, to me, could be sending us a warning signal. The reason I say that is look at this massive reversal candle here. It basically engulfed all this over here in one candle. That's never good. But what I think is more interesting here is we have the spiders. The S&P has floated up. The NASDAQ has been making, new highs, right, over the last couple days. We've seen the Russell doing the same, new highs. The transports could be sending us a warning signal. Remember, the transports are a leading indicator for the market. It denotes economic action. It denotes economic future outlook. So the fact that we've had such a minor bounce on the transports here, the IYT ETF, that is troublesome. I mean, look at how little of a bounce compared to the big drop. And then if you look at the spiders or the NASDAQ 100 chart or the Russell, the IWM, they're all basically at their highs or very close to them versus this chart. So that's a little bit concerning to me. Then you also bring up the put-call ratio. I mean, there's so many issues here in the market. So many issues with the put-call ratio that, again, is below 0.4, has remained that way for a long period of time. As of yesterday's close, it was 0.43, so it inched up a little as of yesterday's close. We'll be interested to see what it does today. But again, the put-call ratio is important for those of you that don't know, because it basically tells us how many calls there are being bought by the average investor to how many puts. And when you get basically a 1 equals even a number of puts to calls. When you get lower than 1, it means there's more calls. When you get higher than 1, more puts. When it gets super lopsided like it has been at 0.4, 0.3 in that range, it tells you that there's too many small investors overloaded to the long side by buying calls. The institutions don't like to pay that out, folks. So keep an eye on that. That could be a key signal that, again, tells us that the institutions may be looking to sell this market off over the next few weeks going into year-end or early January. So these are just things that I'm watching, folks. I mean, you have insider buying and selling ratios. The amount of sellers to buyers from insiders is almost unparalleled in terms of how many sellers there are. So there are way more sellers, insider sellers right now than buyers. That's a concern as well, although it's not surprising considering the stock moves that some of these stocks have made. And funds are now underweight cash, believe it or not, which is, I think, the first time since 2013 that they're underweight cash. And again, what does that mean? It means that they're very bullish. And again, that's, when you get all the funds out there to be super, super bullish, that's usually a small contrarian indicator as well. So these are just things that I'm keeping an eye on. Depending on how the volume is into year end, we'll see if it plays out, but certainly something I will be watching very, very closely. All right, folks, have a great rest of your day. I look forward to keeping you guys up to date on all the markets. Come find me on Twitter at Gareth Soloway or at InTheMoneyStocks.com. Come join my services under my name, Verified Investing Alerts or Verified Option Alerts.